up all the market action, and it was a topsy-turvy day on Dalal Street. The Nifty and the Sensex reversed their gains post-lunch after hitting record highs. The Sensex slipped over 400 points from record highs to end over 0.5% lower, and the Nifty fell close to 0.5% after hitting a record high of 11,761. The sell-off was seen across the board, with the mid-caps falling over 1%, while the Nifty Bank fell about 500 points. Surbhi Upadhyay joins us now with a wrap of today's trading action. Surbhi, last hour jitter seen on Dalal Street.
Well, it was really a reminder. Today's market action was a reminder of that Olympic athlete who does the 100-meter dash, and then simply as soon as you touch the finish line, you simply collapse and try and catch your breath, because we touched that namesake level, 11,761 to be precise, just 1 point higher in the morning, and then the sell-off came through. It's not surprising at all, because this has been a breathtaking dream rally throughout the month of March. Just to quickly go through the levels, today we had a lot of selling on the banks. Again, these are pillars of the market that have led from the front. So the bank Nifty was down about 1%. Mid-caps were also fairly quiet. There was a lot of money coming off the parts of the market where we've seen big gains. If I talk about, some of the key triggers ahead, we'll come down to the index action in just a bit, but more about what lies ahead. Now that we've touched this level of 11,761, what next? First and foremost, tomorrow is a big day. So there was caution ahead of the RBI policy. The market is right now going in with a 25 basis points rate cut. That's what's baked in. If we do get that surprise 50, then will the bull charge really resume? That's the first thing to sort of keep in mind. Second, the below normal monsoon forecast wasn't new to the market. This wasn't a fresh headline, because the talks have been doing the round on El Nino. However, if this really starts building in, then this could really temper the enthusiasm and the excitement. Higher crude prices. Overnight, we were looking at about $69 on Brent once again. So if that continues, obviously that's going to be a worry point. But all of these factors go out of the window if the liquidity gush continues. And now let me talk numbers. Look at the kind of money flow that's come in calendar year 2019. So far, we've got a total of 56,491 crores. That's just under $9 billion gushing in. January was negative. Since then, the tap has been on. In fact, so far in April, we're already, almost 10,000 crores positive on the equity side. I'll quickly compare the situation so far in the calendar year. The Nifty is up about 7 to 8%. The mid-cap index and the small-cap index, they've just about broken into positive territory, between 2% to 3% higher. The banks have led from the front. The bank Nifty up about 11.6%. Now, all this looks very good, but context is always important. So if you talk about India versus the rest of the world in this calendar year, then perhaps there's still more headroom. That's what the bulls will argue, because look at the Dow, up 12.5%. Look at some of the other markets like the DAX, the FTSE. Look at the MSCI Emerging Market Index or the MSCI Asia ex-Japan Index. These indices are up between 12 and 14%. And our neighboring market, that one's stolen the thunder, the Shanghai Composite up 30%. So you could argue that if the bulls continue to get this dollar flow momentum, then the party could last. But yes, there are some near-term headwinds also on the horizon in the form of the monsoon outlook and, of course, Brent prices.
All right, Surbhi, thank you very much for bringing us a detailed wrap of all of that market action. Now, here's the CNBC-TV18 exclusive. The Reserve Bank of India is planning to come up with a new circular to tackle bad loans after the Supreme Court's verdict on the February 12th circular yesterday. Now, do remember the Apex Court had declared the central bank's bad loan resolution framework, which came into effect on the 12th of February last year, as unconstitutional. Now, sources have also told CNBC-TV18 that the RBI will not seek a review of the Supreme Court order, as was being speculated. Lata Venkatesh, who broke that story for us, joins in with exclusive details. Lata, what sort of a new circular are we looking at? Will it be similar to what the Feb 12 circular had, minus the pressure to take companies to IBC?
It sounds logical that the new circular should not have the elements which the court has objected to. But just to begin at the beginning, there were two options that the Reserve Bank was working with one set of legal experts saying they could go to the court and say, can we keep the circular as it is and just knock off the unconstitutional provisions or the provisions held unconstitutional, which are the bankruptcy-related clauses. That was probably restricted to just one or two clauses in that rather long circular. The other point of view was that we drafted anew with fresh suggestions of how to, tackle or how to resolve NPAs, whether any of the old S4A and SDR need to be revived or not revived. So it would be best to work afresh. There were some worries in some legal circles that will the RBI earn the court's ire by saying that we told you the circular is, unconstitutional, and you yet go and redraft? Then the legal opinion that appears to have prevailed is that no, you could draft an order clearly stating in the preamble that we are omitting these provisions because the court has given the verdict that it is unconstitutional. So it could be made clear upfront in a press release or in a statement, and therefore work has already begun on a new circular. But I was not told whether it's halfway through, whether only the first paragraph is written, or whether the element it's clear that consultations and discussions have begun. Of that we are very sure. We don't know how much is written. Now, the right call, the question everyone will debate. We have two people to tell us their views. We have former Reserve Bank of India Deputy Governor Mr. H.R. Khan, Uday Bhansali of Deloitte, and Anil Gupta Vikra will also be joining in a minute. Mr. Khan, you must have gone through all the events of the last 24 hours. What is the best counsel available? Is it correct that the Reserve Bank go ahead with a new circular altogether?
I'm not so sure what is the thinking of Reserve Bank. I believe the top echelons of Reserve Bank must be busy with monetary policy
Yes.
discussions, which so I think policy is immediate concern for them. Probably since this has come as sort of a surprise to Reserve Bank, they will take all opinion, legal opinion and other expert views before they decide about the next course of action. I would think this provides an opportunity to Reserve Bank. There is no doubt that IBC framework is a game changer, but there are lots of question marks regarding quote unquote the harshness of February 12th circular. Probably the transition time was not there, one-day default, probably given the Indian content a bit considered to be. This is an opportunity to smoothen, come out with a fresh guideline in education and IBC framework side and take it. And should the banks have been cases coming under CBC, court, CAG and all that. So they are not. If you have a framework, there is a committee debates the proposal and the hounding of bank decisions are really more.
You think an overseeing committee should be a new circular?
That from the banks, that they have followed the process and procedure.
Okay.
I think that is there, and probably RBI will use this opportunity. I think you'll agree. But sometimes you will get it away, and maybe aspects were not consulted.
Okay.
So dream that.
Okay. Well, I don't know.
This is an opportunity to get rid of that and come out with a framework which will comply with the court's judgment and smoothen some of the rough edges of the deadlier circular.
Okay. Mr. Khan, exactly what should change in the circular? Of course, they have to drop the bankruptcy clause. What else would you want changed?
No, the whole problem comes whether you can give a sector-specific relief. So the sector-specific relief can lead to a lot of lobbying, lot of acquisitions. So one has to. So
that should not be given, is your point?
So I would suggest if there is some framework is created, and we have some people in a transparent framework, they can come out with some views that this particular sector, these issues, and we can have. Maybe we can think of that, but it's not very easy to do, because you will be accused of quite a few things. For example, people have accused that airline companies were unduly favored. So like that, so one has to nuance it. How do we take care of that? That is important. And the second part is some transition period may be given, implementing one-day default immediately. Maybe we can say that the account which moves to SMA2 immediately you start and take care of those legal provisions which were particularly
Mr. Khan, I don't know why there is such a hue and cry against this one-day default. You know, my builder charged me 18% interest because I was 1 week late in paying my second tranche. If I can be punished, damn it, why can't the borrowers be, sir?
I agree with you, but then we have a framework of SMA 0, SMA 1, SMA 2. We have an NPA framework of 90 days. So give some breathing time. It's a large infrastructure project. Don't happen like that. There are so many linkages involved. I agree there are people who have taken system for a ride, but there are also people who have been genuinely cut into. It's not that Everybody has misused it. There are number of people have misused it, but then
I was only arguing for the rights of the good borrower and for the rights of the depositor. That I think is getting eclipsed.
On that, there is no dispute. On that, there is no dispute. What I'm trying to say, we have a framework of SMA 0, SMA 1.
Fair point. So you're saying that is one of the elements.
Yeah. And over time, we should move to that. Over time doesn't mean 10 years. Maybe 2 years, 3 years, and in the meantime, smoothen all those linkages which create problems. There also government has a responsibility to see that these systems are
absolutely.
Put in place.
Mr. Khan, if you just stay on with us, Mr. Uday Bhansali of Deloitte is also with us. Mr. Bhansali, in the absence of the comfort coming in from, the NCLT courts blessing a resolution plan without the threat of CBI and CVC questioning the banks later, what are the other resolution mechanisms or the options that the Reserve Bank of India has to work with to give that comfort to the lenders in the absence of the Feb 12 circular?
Okay. So, clearly there is a bit of a, course correction in the entire IBC journey. And, given the judgment of the Supreme Court, I guess the RBI can easily fall back on the Project Sashakt provisions, where if there is an agreement by 66% of the lenders and they have signed the intercreditor agreement, it is still possible to, resolve the NPA problem in a particular corporate debtor. So I don't think it's all doom and gloom. Clearly, there are cases which were prior to the Feb 12 circular, which are sort of in mid-flight. They still continue. If there are cases, like we are working on a couple of cases which are initiated by the corporate debtor and not by the lenders under Section 7, which has been declared ultra-virus by the Supreme Court. So those still continue. There are several cases where, my partners have been filed as, resolution professionals, but they have not yet been admitted by the concerned NCLT having the jurisdiction. So really some of those cases haven't really moved forward. So this is time to go back to Project Sashakt. It is possible. We are seeing an increasing amount of activity cross-sector in the pre-IBC, the OTS kind of mechanism
but
to
Mr.
try and find a resolution.
I just want to get Anil Gupta in. Anil Gupta, do you think you need another circular?
Yeah, hi Lata. So, yes, circular, see, we require clarity on what happens to the resolution plan. So the February 12 circular talked about resolution plans being rated independently by external agencies, and second one was basically when the accounts get upgraded. So earlier NPA, the account upgradation criteria was the satisfactory track record in terms of repayments for 1 year, and after that the accounts used to get upgraded. Now the problem there was that the lenders, typically the repayment schedule was made in a ballooning manner, whereby the repayments in the first year was very nominal at 1% or 2% of the total debt. So that way you can upgrade the accounts quite fast, whereas in February 12 circular, that upgradation criteria was linked
20%
to
of the
20% of the amount. Yeah, so the upgradation criteria were quite stringent in the revised circular, and also there was a provision of vetting of such resolution plans, whether such resolution plans will be workable or not. So what a clarity is required is how the restructured plans, in what schemes these will be restructured, and what will be the criteria for upgradation whenever the restructuring happens.
Okay.
Mr. Bhansali,
so to that extent we'll require,
go on, Mr. Gupta.
Yeah, so to that extent, we'll require some clarity on these two aspects. Yeah. Okay,
Mr. Bhansali, just to quickly go back to the point you were making, in terms of the intercreditor agreement itself, most of the private lenders are not on board yet. What will it take for projects, Sashakt to really work with only the public sector banks right now agreeing to even sign on the ICA?
For instance, Ritu was covering the JET plan, and she says, although SBI is ready to put its money, others have not signed off on the resolution and they are not putting their share of the money. So you may have a Sashakt, but if the bankers in question don't put the money in, what do? The 66% is not workable outside the IBC, is it?
Correct. No. You can still arrive at OTS irrespective of Project Sashakt. But this is something that we are actively working on in a few cases. And the whole, yes, the exposure, the NPA tends to be more skewed towards the public sector banking system. But equally, there are sort of a few private sector banks involved. And we do find them pretty cooperative and pragmatic in trying to arrive at a resolution of these assets.
Just put that final question to Mr. Khan. Mr. Khan, do you think the new circular, as and when it comes, should clearly say that 66% of bankers by value should approve and others, it is binding on the others? Is that a clause that should have been put in?
No, some transparent framework will help everyone. Otherwise, again, tomorrow somebody will be held up how this drawn up this scheme. Better to create a structure without affecting the flexibility given to the banks, but create a structure. I'm not talking about 66% particularly, but create a structure which is transparent and everybody can rely on that.
Okay. All right, sir. We'll have to wait and see what the new circular looks like and when it will come. Thank you very much for all your inputs, Mr. Khan, Mr. Bhansali and Anil Gupta.
All right, Ladan, thank you very much for joining in with that important story and that discussion. But on that note, we'll slip into a short break. Coming up next, weather forecaster SkyMet warns of a below normal monsoon and interaction with Jatin Singh, the MD of SkyMet, when we return.